before we start, endeavor to hit the subscribe button, the like button, and the notification bell so that you always get my notification whenever I drop videos. Okay, welcome everybody. Today I'm going to be speaking on understanding financial markets, meaning types and functions. So, what is financial markets? Those curious to know about financial markets, they do ask what is financial market. So, financial markets provide a controlled environment for trading. In such an environment, transactions are conducted transparently. They support economic growth by enabling the efficient allocation of resources, ensuring funds move from savers to entities needing capital. So that is financial markets is the buying and selling of goods. That is the financial market is the flow of goods and services. When there is somebody to buy, there is always somebody selling. So that is financial market. You are buying and selling. So types of financial market. We have types of financial markets. We have stock market, we have bond market, we have shares market, we have commodities market, and we have financial market. So what is stock markets? Okay, stock markets. Stock markets are platforms where shares and public companies are bought and sold. So these markets allow businesses to raise capital by issuing shares. So let me say a company that issues shares let me say, should I say like Mr. Biggs. Mr. Biggs have a lot of shares that he issues and people invest in this company. So they are expecting returns. So this is stock market. Like Google is a stock market. Apple is a stock market. So these markets allow businesses to raise capital by issuing shares. Okay, just as I said, these companies, they used to raise capital by investment. Will say, okay, invest, and this is what this is your share in this company. This is your place in this company. This is what you're going to be having after this month or after this week. So that is the stock market. So the investors purchase shares and earn dividends. So that is it. If you are moving into the stock market, then this is what you are going into. So investors benefit from dividends as the price of the company shares grows. That is like Google. There are a lot of people investing in Google. So if Google grows, these individuals and companies that bought the shares in Google would be having a lot of profit to make when the company grows. So that is the stock market for you. Then I'm going into the shares market. So what is shares market? Shares market enables buying and selling companies shares. So like as I said, shares are as the goods and services. Shares are a place of this company where they issue out to individuals that want to invest. So they buy it and they wait for it to grow so that they will earn their returns. It's also investment. When you invest in these shares, then you are expecting returns. So that is it. Price demands and prices depends on demands and market conditions. So that is it. Prices depends on demands and market conditions. And then companies raise capital by selling shares. Just as I said, if these companies do not issue shares, then it is either they already have this money to put here, but if they are looking for this capital to use to renovate their their company, then they issue out shares to investors. They issue out shares to individuals that have the money to invest. So investors can earn through dividend or price gains. That is how share market works. Financial authorities regulate to ensure fairness. That is it. That is shares market for you. So bond markets. So what is bond market? Debt securities are traded in the bond market. That is when you are into when you say you want to trade the bond market, we are it is like a loan thing. You are you are getting a loan. You are you are buying something out of loan. So you are purchasing a good with interest. So bond market are types of loans in this market. These loans are offered to entities like governments or corporations. Just that. So entities agree to pay back the loan amount plus interest in exchange for loans. That is it. If a company needs a loan and this company is gonna be is gonna be that is their expectation is that in this month they are gonna be heading high. So they do the bond market, that is they enter bond because they want investment. So they are collecting loan because they want to improve their company. So you are the one lending them this loan. So you give them this loan because you are expecting much from them. You are expecting interest from them. So that is how the bond market works. So commodity markets enables the trading of physical goods. These markets pro, allow producers and consumers to manage the price risk. So these markets allow the producers to manage the price risk. Then the price risk in these markets are associated with raw materials. That is it. You got it. So the commodity markets deals with raw materials. You are buying and I'm selling. Just as you go outside, you see people are there, are standing outside. People are there in their shops, and you buy. Then you collect your money. Then you give your money. Then you buy what you want. That is the commodity market. So what we are doing here is called the forex exchange. So the forex exchange markets. So that's the foreign exchange market. That is called forex, the foreign exchange market. So currencies are bought and sold in this market. This market manage currency risk and take advantage of exchange rate fluctuations. So that is it. So foreign exchange markets play a critical role in supporting international trade. That is it. So these foreign exchange markets play a critical role in supporting international trade. Just like if you go out and if you want to travel out of the country and you go to the counter, you go to the airport counter, you change your money, you change your naira to dollar. If you're trying to be traveling to the US, you change your naira to dollar because you are moving into the US and they don't use naira there. So you change your naira to dollar. So that is the efficient flow of currency. You are changing it and you are. So financial market functions. What are the functions of financial markets? So financial markets perform several vital functions that benefit economy, businesses, and individuals. Mobilization of savings. Financial markets encourage people to invest money wisely. This help increase capital in the economy. As you can see, when there is a free flow of currency, that economy is going to be going smoothly. But when there is a bad flow of this currency, that economy is depreciating. So efficient resources allocated, that is efficient resources allocation. When there is somebody to buy, there is always somebody to sell. That is when the that is when everything is flowing well in the market. Because if there is flow of product and there is no flow of sales, then the market is not flowing well. The market is not going well. So people are not making their money. So that is it. So excess capital funds flow to sectors that need funding, ensuring efficient resources allocation and supporting economic growth. That is it. That is that for that. When there is exchange of funds for those that need it, and you invest in people that need it, that is you are changing, you are flowing the currency, you are expecting returns, you are that is it. So price discovery markets enable price discovery for various assets. Prices are determined based on supply and demand. I said prices are determined based on supply and demand. So supply and demand is when you buy, there is somebody selling to you. When you are selling, there is somebody buying. That is supply and demand. The the work need to go smoothly. When there is somebody to sell, there is somebody to buy. That is when the economy is flowing. So liquidity provision. That is financial market makes the market to flow um, fluently. When there is somebody to buy, there is somebody to sell you. So you see that there is huge product coming out, and there are huge people buying. There are a huge set of people buying. There are huge individuals buying the produce, the product. So that is that. Then risk management. Investors can manage risk more efficiently through trading in diverse assets. Financial markets offer opportunity to spread investments. You understand? When you trade forex, when you trade forex, yeah, and other financial markets, when you trade them, there is risk management so that you won't lose your money. Add your risk management to manage your money in your account. So that is that. So what is financial markets? So with the fact of financial markets. So financial markets are platform where individuals and companies trade financial assets. This process facilitates efficient capital flow and economic stability. That is that. So when there is a free flow of currency, then the economy is moving smoothly. That is when the economy is going to be hitting high. Then if US is hitting, if US currency, if US is giving their economy good growth, then there will be real highs in US dollar because the economy is good. That is when you see that dollar will be going up. Dollar will be moving very fluently. So, as I said, we have so many types of them. We have five types of financial markets. That is, we have the stock markets, we have bond markets, we have commodity markets, and we have foreign exchange markets. So each serving is for them, each serves a specific trading purpose. How to understand financial markets. Understanding financial markets. First, understanding financial market begins with knowing the basics of trading, investment, and functions of various market types. Reading introductory materials in materials on finance can help build this foundation. How to understand the financial markets, analyzing trends, studying supply and demand patterns, observing economic indicators are ways to understand market behavior and make informed investment decisions. So that's that. You need to build your strategy. You need to get to know strategies before you place a trade in order not to lose your money. What are characteristics of financial markets? So, characteristics of financial markets. Markets are characterized by high liquidity, transparency, efficient price discovery, and mobilization of funds. Now, liquidity is when the currency pair that you're trading on is moving smoothly. That is, you see them moving up and down, up and down, up and down, up and down. That means there is high liquidity between these currencies. That means the currency flow between these two currencies is very efficient, very good. So when there is high liquidity in forex, people tend to make good trades. But when there is low liquidity in forex trading, the people tend to make bad trades. So then we are going to I think how to understand the characteristics of financial markets. Transparency. When there is a transparent market flow, that is, you see that okay, this currency is how to understand the forex. You see that this currency is moving this way, so you place your trade this way. You see that the currency moves in your direction. That is currency transparency. There is no hindrance to your trading. So that is that. So efficient price discovery. When you do your strategy, you will see that okay, this price is this price is that. You see that forex trading is always showing you the current price rate. You're always seeing it in on your screen so that you will know where and how to place your trade. That is what and how forex trading is. So mobilization of funds. Forex trading mobilizes your funds. That is, it is okay for you to say, okay, this is what I am doing, this is what I am heading, this is where I am heading, and this is what I want to do. You are decisive. You say, okay, this is where I'm going. You don't just place your trade because you see that the market is moving somewhere and you place your trade. No, it is mobilized. You get to know that, yeah, this is what I'm doing, this is where I'm going. So that is that. Okay, so each assets and stocks, such as we have assets like such as stocks, bonds, commodities, and currencies, which allow organized and efficient trading activities. That's it. So now, what is forex trading? I have finished with what is financial market. So now, what is forex trading? Forex trading, at its core, it's about capturing and changing values of pairs or currency, pairs of currency. For example, if you think one currency will gain a value against another, then you buy one to sell one later at higher price. In addition to speculative trading, that is it. Forex trading is also used for hedging purposes. Quite simply, it's the global financial market that allow one to trade currencies. Hope you understand that. Forex trading is used to see the current price of currencies so that you know which currency is higher than which one. That is forex trading for you. So if you think a currency will be stronger versus the other, then you end up correct and then you make your profit. Once you do that, then you are making good trades. So if you are going to a country and you are going to a country, let me say from Nigeria here, I'll be going to US. So I would be changing my naira to dollars because they don't use naira at US. So I'll be changing my naira to dollars. Then that point, that exchange that I'm doing now is called exchange rate. You are going to see the rate at which each currency is so that you will say, okay, this is how much I am buying and this is how much I'm selling. You will see the current rate of each currencies. So that is, let me say, like if you go to if you want to travel to Japanese from US and you are changing your US dollar to Japanese yen, if you are changing $1 to Japanese yen, you might you will say, wow, I'm getting richer because one US dollar is one US dollar is huge money in the Japanese yen. So just like that, $10 is still huge in the US dollars. So when you do this, you are essentially participating in forex trading. You are exchanging one currency for another. In forex trading terms, assuming you are visiting America, you sold dollars and bought Japanese yen. So that is it. That is forex trading, the exchange of currency, just that. So I'm heading to what is forex. What is forex? So that was what is forex trading market. What is forex trading market? So now what is forex? The foreign exchange market. So that is forex. The one you used to hear FX, FX, FX is called forex. So forex trading is the largest financial market in the world. The FX market is a global decentralized market where the world's currencies change hands due to the wide range of market participants, including central banks, institutes, corporations, hedge funds, and individual traders. Exchange rates change by second. That is the exchange rate of each currency change by seconds. You see them going up, down, up, down, up, down, up, down. So the currency pair is constantly fluctuating. So that is that. So I am done for this section. So our next section we'll be talking on currency pairs so that you're going to get to understand your currency pair and you'll see where it is in the platform. So that is that. All right. Meet you in the next section. Thank you.